Hey guys, welcome back to the channel. So if you're a first-time investor and you're using Trading 212, you're probably aware that you can access dividend stocks at zero commission. And you've probably watched a handful of YouTube videos talking about dividend stocks and dividend investing. In fact, it's probably quite attractive to you because you like the idea of getting a dividends and generating a passive income. What I wanted to do in this video is just look through Trading 212, see what stocks are actually on there, but more importantly, talk about some key considerations that you have to bear in mind if you're new to this and you want to start building a portfolio. And these may not be things that you're thinking about immediately, but certainly should be in your thinking at the very, very beginning. Because with all things, there are two sides to the coin. And there is an argument to say that, yes, definitely invest in dividends. And we'll talk about that argument. But there is also a flip side to say that actually it's not prudent to specifically and exclusively invest in dividend stocks for dividend growth only. We'll cover all the bases. Now, if you are new to this channel, you're a first-time investor, you want to learn about investing, welcome. Consider subscribing, smash that like button for me. It will help you out with the YouTube algorithm, and hit that notification bell. I upload every Tuesday and every Friday. If you do want free shares with Trading 212, I will leave a link in the description below or in the comments below. Use my link to get a free share. Let's go. All right, so let's cover some of the basics. What is a dividend stock? So a dividend stock is a company or a stock that pays dividends to its investors. So typically how this works is a company posts a profit in its financial year, and it will say, I'm going to share X proportion of my profits with my investors or my shareholders. Now, key thing to remember here, guys, is a company has to be in profit in order to pay a dividend. They can't pay dividends from a loss. But this next point is really important. I'm going to circle back to this. So make sure you stick to the end of this to understand how this all ties together. Not all profitable businesses pay a dividend. And a business has to be profitable in order to pay a dividend. However, not all profitable businesses pay a dividend. Really important to note, really important to understand. Now, there are the dividend aristocrats, which are a group of companies that have paid dividends for years, and they've increased their dividend payments every single year for almost 25 years now. I will do a separate video on those guys because, frankly, if you're looking to build a portfolio and you want a little bit of security, those guys can give you a little bit of stability within your equity portfolio. Now, dividend aristocrats aside, you have to bear in mind that point. Not all profitable companies pay a dividend to its shareholders. So why are we talking about dividends? I mean, clearly, in order for this to be so popular and for so many people to have so many videos on it and for it to be a thing, it has to have had a track record. Now, you look at the S&P 500 between 1940 and the 2000s, dividends accounted for 52.7% of the growth in the S&P 500. Now, when you look at those numbers, it is irrefutable to demonstrate that dividends plays a big part in wealth creation. It really, really, really does. And the great thing about dividends is that if you are reinvesting your dividends, you get something called hyper compounding, which is effectively compound interest, but because you're then putting your dividends into it, it snowballs the effect even further. It's a really, really good advantage to receiving dividends that you reinvest into your investment, in opposed to taking it as a passive income. So look, there is a track record for this. But one of the key things that is really important, and again, this account here is all about providing education and context for you guys so that you can use the context in the environment where you are. And if you're investing in this day and age, it's important to consider your current climate. And I do want to zero out on the fact that dividends are great. And the S&P 500, it's delivered almost 53%, since 1940 to 2000, to really give a sober reminder of what's happening in today's environment. Now, let's bring it a little bit closer to home, the FTSE 100. There are about 50 or 51 companies on the FTSE 100 at the moment that have either cut or suspended dividend payments this year. There seems to be this notion that dividends are guaranteed. They're not. A company has to be making profit in order for them to pay dividends. If you look at it this year, COVID has happened. Businesses haven't been able to operate at the same level that they have been. They haven't been able to sell as much product. Therefore, profitability may be threatened. Many of them are letting staff go in a bid for the businesses to survive. Therefore, right now, dividends can be a little bit of a challenge. And again, 51 or 50 of the FTSE 100 companies have suspended or cut dividends. But with that said, within Trading 212, there are still a number of dividend stocks that you can pick up, 0% commission, which I want to talk you through now. All right, so let's jump on the Trading 212 app. Now, if you go onto the search icon there, you've got most popular, you've got dividends. There are 24 stocks in there right now. Now, if you click on this, it will contain names that you know: BP, Royal Dutch Shell, AT&T, ExxonMobil, Macy's, IBM, Wells Fargo, Total, Imperial Brands, Rio Tinto, right? These are all companies that if you've watched any dividend stocks videos here on YouTube, these will be the popular ones that you can access pretty easily using Trading 212. Now, I get a question that I want to help answer in this section, but I do want to pay particular attention to AT&T because AT&T have always had a really good dividend yield. And the question that I often get when it comes to dividend yield is, well, Pete, how do you calculate what the dividend payment will be based on the dividend yield? So let's have a look at AT&T. At the moment, the stock is trading at $29 a share. Now, if you go down here, you'll find that the dividend yield for AT&T is 7.17%. So pretty good yield. Now, it's really important when you're looking at dividend yields and you're doing your research on these companies that you just don't take the highest percentage dividend yield that you can find. The reason for that is as the stock prices go up and go down, oftentimes a high dividend yield can be a sign of a company that has actually lost value when it comes to the share price. So the share price is reduced in value quite sharply. So just don't look at the dividend yield. What you want to have a look at is how much they're paying per share in dividends. And there's a simple way that you can actually calculate this. So the dividend yield here is 7.17%. What you need to do is move the decimal place backwards 2 spaces. So you get 0.717%. And what you do is you divide that by the share price, which is 29. That will get you to around about $2.07, roughly. You can round it up to $2.08, right? Now, if they pay quarterly, you divide that number by 4, which will get you to 50 or 51 cents roughly. You can always use dividenddata.co.uk, which is the website right here that I'm just showing you now, to verify your calculation to make sure that it is right. But essentially, what this is showing you is that they're paying around about 51 cents per share in dividends, which is pretty good for a company. Now, with that being said, when you're buying companies with dividends, you have to bear in mind that because they're paying dividends right now doesn't mean that they're going to pay dividends forever and into the future. So again, when you are looking at these companies in Trading 212, you want to be paying attention to some of the financial details. And the financial details will only give you so much information. So you're probably going to need to go to Google and use some other resources as well to do some further research. And the key questions you would be asking, given the climate that we're in right now, is how badly has this company been affected by what's going on in the world right now with COVID? So, for example, has their profitability taken a hit? How sustainable are they in their business in terms of, do they have a strong balance sheet, money in the bank to continue to pay dividends? And if the answer to most of those questions are no, then you should bear in mind that there may be a suspension of dividends, or they may even cut dividends going into the future. What I'm trying to say here, guys, is just because you've got 24 stocks here on the Trading 212 app doesn't mean you just blindly go and buy those. You need to do some due diligence of your own to back up your hypothesis, or even to negate what you're actually thinking and make you think in another way. You have to think in context of what the climate is right now and what's going on with businesses. That's why you need to understand what they do, how they generate their money. Has their future income source been impacted? Will it be impacted by any factors that you are aware of right now, or factors that may come around in the future? Are there any disruptors? Are there any competitors in their sectors that could potentially take a market share? Very, very hard questions to kind of answer straight off the back. It does take time, it does take research, but they are key considerations that you need to be bearing in mind and questions that you need to ask. Now, I do want to talk about the fact that if you are a first-time investor, dividend investing may be really attractive to you because let's face it, YouTube is great at making passive income sound sexy. I mean, I have people message me on IG all the time saying, I want to generate a passive income of £200 per month. When I ask how much are they investing, it's very, very little. The reality is, in order for you to generate a passive income, you need a decent amount of capital behind you. You're not going to generate £200 a month in passive income, with you only investing 500 quid or 200 quid a month. That is going to be absolutely impossible. Now, with bearing in mind that we need to keep balance, and I always say this, that if you're young enough, really should be investing for growth. And if you're investing for growth, I've already alluded to one thing, you should be reinvesting your dividends. So literally trying to get hyper compound interest effects into your investment, because that's what's really going to add value. Now, I do want to place an argument, or at least position an argument with you, that if you're a first-time investor, it isn't prudent to simply just look at dividend stocks as your main way of investing. And I'm going to give you 3 good reasons why. The first is this, and I alluded to this at the top of the video. Not all profitable businesses pay dividends. I'll give you an example. The greatest investor of our time, Warren Buffett, his company, Berkshire Hathaway, does not pay dividends. So if your criteria is that you only want to invest in companies that are paying dividends, and you have that filter when you're looking at stocks, discounting everybody who doesn't pay dividends, then you are saying goodbye to Berkshire Hathaway. You are saying goodbye to Tesla, who has absolutely killed it this year. You're going to be saying goodbye to a host of companies who are profitable, but just don't believe in paying dividends. Warren Buffett, for example, believes that he should reinvest as much money into the business as possible. And that's one of the reasons why he's been so successful. So it's really important to keep an open mind. And this is where we go back to, what is your goal? What are you doing this for? Your goal informs your plan. Your plan dictates whether you buy in dividend stocks, or whether you don't buy any dividend stocks. It will determine how many dividend stocks you hold and in what proportion in your portfolio. These are all key considerations. So just don't go into this thinking, I've watched a load of videos about dividend stocks, that's what I'm going to do. You're going to miss out on some very, very good companies. The second thing that I think is really important, and I've spoken about this before in a previous video, is that, as investors, we should be thinking about total return. And when I mean total return, it's all about the change in the value of your investment, and that includes and takes into consideration any dividends growth that you get as well. So a total return is really important. Consider that. It's not just about dividends growth, it's about performance as well. How is the company actually performing? If they then pay dividends because they performed really well, that's the cherry on top of the cake, which is my last point, which is this. When you are doing your research, you should have a key drive around what kind of companies you're buying and why you're buying them. Remember, the whole point here is you buy a company that you feel has a value today that will be greater in the future. If you use that ethos, then hopefully, and you're doing your research, then hopefully you'll be picking up companies that you believe in, number one, because you understand what they're doing and you understand what problem they're trying to solve. But number two, if you've done your research really, really well, have good management behind them, good financials, and financials can be a little bit of a skew because people like Tesla, for example, only just starting to make profit. Stock price going nuts right now. I think it's $574 today as we speak, and it's targeted for $1,000, and it's not even into the S&P 500 just yet. Financials are a component, but not the only component. So the important thing is do your research, buy companies that you feel you believe in and are strong. If they then pay dividends, that is the cherry on top of the cake. But guys, I hope that made sense. I hope that was useful. I'd love to hear your thoughts. Are you only just starting out, and are you just considering, or were you considering just looking at dividend stocks specifically? Let me know. If this kind of video is useful for you, then let me know in the comments. I will make more. I will have a look at a video to talk about the dividend aristocrats as well. But guys, leave comments in there. Again, if you want any free shares in Trading 212, there will be a link in the comments pinned below. Take advantage. I'll also leave a link down there for stake as well. Remember, with stake, you've got to fund your account with 50 quid, 24 hours. Within 24 hours of you opening your account, they're giving away stocks in Nike, Dropbox, and GoPro. They've got really good analytics as well. So when you're doing your research, that's an additional tool which is priceless in my opinion. But guys, thank you so much for watching. I hope you have an amazing weekend. If you've not listened to the podcast this week, there it is right there. Take care.